sooner rather than later. Thank you. All right, I'm going to have to ask you to quickly take your seats, please. If you want to keep networking, you can do so outside. If you're staying in the room, you have to take your seat. Thank you. Okay, I'm going to hand you over to Jay Gomez, who's a partner with Tri Lawyers, and he's going to be chairing the plenary session on FinTech. Enjoy. Jay.
Your Excellencies, Head of Government, Ministers, ladies and gentlemen, welcome to the FinTech Innovation Panel. My name is Jay Gomez. I'm a partner at Tri Lawyers, a firm in Gibraltar, and it is a pleasure to be moderating today's panel. We have an excellent lineup of panelists, but before that, your next speaker is a gentleman who had the foresight to embrace technology within his own financial institution, and this has undoubtedly contributed to their success story. It is a pleasure to introduce the founder and chairman of Zenith Bank, Jim Ovia. Thank you.
Distinguished guests, ladies and gentlemen, very special good afternoon to you all. And when the moderator did introduce me, I thought he was going to mention one of the founder of blossoming FinTech companies, because they are the profitable ones now. The banks are not as profitable as the FinTech. Good enough, we have the banks that are supporting the FinTechs. And also, if I might just give you a recent remarks by Jamie Dimon, the CEO, chairperson of JP Morgan Chase, yes. He said that the FinTech companies, they are beginning to have our breakfast and our lunch, that we shouldn't really let them have the dinner. And for us, what we are doing is collaborating with them and also partnering with them. And one of my very good friends and colleague, that's Valentine there. Valentine, he was one of the early starters of FinTech company, the eTransact. That was about 20 years ago. And he's now in about 6 countries and making millions of dollars of profitability. So Valentine, we congratulate you. Now, talking about future group, future economies through FinTech, that's the directions. And I was also very pleased to listen to the speaker who was introducing a number of growth opportunities in the Commonwealth, particularly in the UK. They had more than 30–40% of the FinTech companies that had grown so well and very successfully in Europe. They are all in the United Kingdom here. And he also had forgotten to list out some of the Commonwealth of Nations, including Nigeria, where we have so many unicorns among the FinTech companies. And I'm also proud to mention quite a number of them in Nigeria, including eTransact is there, Flutterwave, OPay, and these are institutions that are easily above $1 billion that were started just only about 7 years ago. So there's no doubt that FinTech is the future. We continue to propel and empower the future economies of many Commonwealth of nations and, of course, world economies. And I'm very proud to also announce that a number of our friends will be up here as panelists to speak, and we will learn from all of them, and including how they make the billions. And we can now assuredly remind Jamie Diamond that they may eat our breakfast and our lunch, but certainly not our dinner. Thank you so much.
Thank you very much, Jim. I'd like to invite the panelists on stage for the FinTech session. Thank you. So hello, everyone, again. We're very fortunate to have a panel of innovators amongst us. Before we kick off with today's session, I'd like to give each of them an opportunity to introduce themselves. So please.
So hi, everybody. My name is Bhairav Trivedi. I'm the CEO of Crown Agents Bank. We are a small bank here based in Sutton, but pretty global in outlook, and we operate in about 130 countries globally, primarily doing foreign exchange and payments. And we have a strong legacy. We've been around for about 180 years, but over the last 3-4 years, we've actually migrated the business model to really assist pretty much international development organizations, regional banks across the world, as well as fintechs across the world.
Thank you. My name is Valentine Obi, and I'm the founder and group CEO of eTransact Global. We started in 2003. Like James said, long before the word fintech became, or rather came into the dictionary. But we've been powering a lot of our banking institutions in various countries in Africa. We enable interconnectivity and interoperability between banks, even mobile money operators. And we provide those kind of services, all digital transactional capabilities, in our industry. It's also important for us for me to say that in the past 20 years, we have seen quite a lot of growth in this area, and it is really heartwarming to see that those things we started 20 years ago, and people thought it wasn't really the way to go. Today, it's actually mainstream, and indeed, like I said, it's quite heartwarming. Thank you very much.
Hi, my name is, you can hear me. Yeah.
Yes.
Hi, my name is Adib Ahmed. I'm the managing director for Lulu Financial Holdings. We're a financial holding company based out of Abu Dhabi, predominantly into the cross-border payment sector. And we're present across 10 odd countries, so entire GCC, India, Philippines, Malaysia, Hong Kong, and Singapore. On an annual basis, we move a little over 14 million transactions, moving $9.6 billion in cross-border payments, predominantly into the South Asian subcontinent and South Asian markets, India, Pakistan, Bangladesh, Sri Lanka, Philippines, Malaysia. It's been a very interesting play in the last couple of years because the amount of digitalization that has happened, the pace at which the digitalization has picked up has really taken us by storm as well. And then, of course, the newer areas, which is into the SME sector and the B2B, is also now taking up its stride. So I think it's a very interesting time that we are seeing today. And of course, the next couple of years, we'll see many more disruptions happening in this sector.
Hi, everyone. I'm Janine Hurt, the CEO of Innovate Finance. We are the industry body for UK FinTech, and we support the next generation of technology-led innovators to create a more inclusive, a more democratic, and a better financial services sector for everyone. We are a membership association, not-for-profit organization. We bring together early-stage startups and your high-growth FinTechs like Wise, Revolut, Klarna, Starling Bank. And we also bring together a number of the large incumbent financial services players like Lloyds Bank, Santander, JP Morgan as well, and the big techs such as Google and Amazon to really look at how we can transform financial services for the better and for the benefit of the end consumer.
Thank you all. So in my own practice, one of the most common frustrations that we hear from individuals like yourselves involved in FinTech is the frustration of the lack of support for the industry, and in particular for innovation. Do you feel that is the case? And if so, what more do you think policymakers can do?
I'm happy to feed in from the UK perspective, as that's our focus point. I think actually the UK government has historically done a very strong job in terms of supporting the FinTech ecosystem. There's always more that can be done, but for the past 10 years or so, there's been a real commitment in terms of supporting the innovators. That's coming from the government level, up as high as the Prime Minister's office, through to HMT, who, when the current Prime Minister was Chancellor, actually commissioned something called the Khalifa Review, which is the strategic review into UK FinTech, and which outlined a course to make sure that UK FinTech was able to thrive and continue moving forward. What I do think we need to ensure is that our regulators, which have historically been very proactive when it comes to innovation, continue to take that proactive mentality and innovate in a quick and a timely manner as well.
So I think that's interesting because, anytime you're making money, you've got tremendous valuations, you're going to get noticed. And I think the industry is noticing FinTech companies pretty well. Also, when you're a disruptor and when you're creating trouble, I think all of us know what's happened in the crypto world the last few weeks, right? And so it's about time that everyone notices. I do believe we need a little more regulation in this space because at some point, it's great to grow without regulation to a certain extent, but at some point we have to actually get more regulation in space. And that's one thing we were discussing even earlier. But I think definitely everyone's opened their eyes and it's taking notice, right? So it isn't something that's not getting noticed.
I'll come on to crypto and blockchain, if I may, a little bit later. I'm keen to make sure that we keep them interested until we get to that. In general FinTech terms, does the panelists feel that traditional financial services regulation hampers the growth potential of some of these businesses? We heard the Lord Mayor, for example, mentioning Solvency II in the context of insurance, and we know the impact that has on insurtech companies in particular. Do you feel that's partly the case in some of your own sectors? The traditional financial services legislation being a barrier to growth?
No, I think in my own industry, I don't, and also my location, like in Africa, most of the central banks have actually recognized this quite, of course they started late. Like most regulators, they actually follow the technologies. And it was clear from the beginning exactly what is expected for FinTech to do and what the traditional banks are doing. Now, I don't really see in Nigeria or in Ghana, limitations, because from day one, as you enter the market, you understand, what you expected of. I'll give you an example. One of the major challenges that has to deal with financial services in most African countries is KYC and KYD, and because of course identification is a challenge and all that. And so in a country like Nigeria, they decided to have what they call premium and light KYCs. So if you have the premium KYC, then you're enabled to do a lot more transactions. If you have the light, you do basic transactions. Now, this is because of the challenges, the fundamental challenges that have to do with ID management in the country. So I see the same thing happening in Ghana. So the regulators, indeed, today, they're a little bit more up to date. Unlike before, like when we started in 2003, there were no regulations. Basically, they say, okay, go and do it and just send us a report. But right now, it's a lot more, there's a lot more control and regulation. New ones that are coming in understands what is expected of them, and they make sure that they follow the regulations. Yes.
Please.
Yeah, so from the areas that we operate inside, especially on the GCC aspect, the GCC is always seen as a very high-risk region as such, but contrary to that aspect, on the UN regulations where we are asked to bring down the cost of remittance on a yearly basis and to maintain a very healthy atmosphere for the expatriate workers who are working down there. From a UAE perspective and a Saudi Arabia perspective, we can say that, we're probably one of the cheapest regions when it comes to cross-border payment fees, And I think so we've been maintaining that for over a decade at this point of time, where cost of a transaction is less than $3, I think so that's very tough in today's atmosphere when we have a very increased level of KYC and compliance that have been cropping up, and then that eats into a larger amount of profits. And we work on very thin margins on high volumes as such, So the biggest challenge that we find is where the international bank is looking to de-risk players such as us without understanding the amount of effort and compliance that we put inside in onboarding our customers inside, and that's a very 12,000 feet outlook sitting out of US or in Europe and looking at the region and not quite understanding about, how effective these kind of systems are playing. And it's very different to what we find in this side of the world. Here, a cross-border payment is predominantly a mom-and-pop shop that works out of a supermarket and so, whereas in our part of the world, it's a very highly regulated industry where that's the only function that we actually do in a very controlled atmosphere, and without understanding these kind of things, when larger banks looks at de-risking, it becomes a bigger problems to institutions such as us. But having said that, in the last couple of years, we have seen the larger banks opening us to view us as a last mile connectivity to the end consumers, and I think so that has brought a very positive approach into a new perspective to our line of business as well.
I think, just wanted to add to that. I think it's important that regulators are there to create rules and make sure people follow them, right? We're getting really sophisticated in the kind of financial products we are creating. FinTech is creating some amazing opportunities, amazing products. Oftentimes, we don't quite understand them ourselves. So in that environment, you want to make sure there's someone to set the rules and to make sure that people follow them. So I think it's really important that we have regulation.
Yeah, I would absolutely echo that. And I think sometimes there's a misperception that fintechs want deregulation, and that's actually not the case. We want smart regulation, we want intelligent regulation, because we want to enable consumers or small businesses to be able to utilize this new technology and benefit from it, but also be protected. So it's really important that we see regulators keeping pace with this new technology, and that we also have responsibility as an industry as well to provide them with education to increase their capability and their ability to regulate some of this new technology as well.
I agree. I mean, I think it's a critical point. One of you mentioned consumers, and obviously that is always central to the regulator's focus. Touching on that point a little bit more, as we've hopefully emerged from the COVID-19 pandemic, we've seen tech development within financial services and also tech adoption by consumers themselves, because during the pandemic, they were left with little choice. Do we think that's likely to continue?
Absolutely. Yeah, absolutely. I think so. Before pre-pandemic, we were sitting at 10-15%, and now we see the entire consumption sitting at very close to 50%. We still have a long way to go, and I think so that's educating consumers, getting them used to the way of this new utilization. But also, having said that, the payment ecosystem plays also a very important role. How do we connect into the payment ecosystem? Is it expensive to connect? When we don't have an integrated payment ecosystem in the country, then we have to use the likes of MasterCards and Visa, where you charged 1.5%, and that becomes extremely large sums when we look at high-scale remittance that has been performed. So it also depends a lot on the local regulator and the payment ecosystem that has been developed into countries. So I think so in a lot of regions that we found out where there is a more mature payment ecosystem that has been built up, adoption is much more faster. And countries that are slowly progressing into that payment ecosystem adaptation, we see that the adoption of digitalization being on a slower pace.
We've seen mobile payments take off. I mean, let's all think about it. When's the last time you ever went to an ATM, took out a whole lot of cash, and used it? I took out $200 200 pounds maybe 3 weeks ago, and I still have 160 in my pocket, and that's probably because I maybe lost 20. I don't even know. But that's about it, right? I mean, all of us tap and go everywhere in terms of payments, right? So that's technology. I remember a few years ago we were saying, oh wow, mobile payments, will it ever take off? And now it's here and it's going to stay, right? And pretty soon we're going to get to iris recognition, facial recognition, who knows? I mean, where it's going to go. So I'm really excited about what's happening. True.
No, I think the trend is going to go, in fact, even going to go a lot more faster. And I remember even when we started, in those days, just by SMS, 2003, I mean, most people don't even have any mobile payment on the app stores, But today it's all over. If you look at in 2003, for example, a country like Nigeria with 200 million people had only 350,000 working landlines with less than 50,000 mobile phones. Today, the simple, over 218 million, they have over 206 million cell phone users. Now, and that shows you, if we look even at our own transactions that started at $300,000 a whole year, today we're doing over $30 billion every year in terms of transaction value. That shows you, and even at the moment, to this particular year already, you have done more transactions than compared to last year. So what we're going to see is also a lot of lifestyle products, digital lifestyle products that are going to take place, that's going to increase, a lot of transactions. Today, the world is as if in a race against itself. People are super busy. There are a lot of things to do. So how you allocate your time to certain things is important. Today, your fridge can order your products right from the for groceries and the rest of them and make the payment. So we're going to see a lot more of these things coming up because we need to free out our time to do other things that are so important. So a lot of lifestyle products are going to be coming forward. COVID-19 basically showed us exactly what was going to happen, and that is going to continue, and it's already happening, and we're going to see a lot more. That's mine.
Absolutely.
I would absolutely agree with all the panelists, and I think we're only going to see an increase in terms of the popularity of digital solutions, which has been accelerated by COVID, but will continue forward. I think if you look at the sort of the pre-COVID era in the UK, 71% of consumers were using at least one FinTech tool. Post-COVID, 78% of consumers are now using at least one FinTech tool on a regular basis. But it also goes beyond that. Over the last 10 years, SME lending is now being done, so 60% of all SME lending in the UK is now being done by fintechs, so your alternative lenders or your challenger banks. So it's just an increased rate of adoption in terms of these new digital solutions as well.
I find this quite interesting, and my generation, I think, relies quite heavily on online purchases, online shopping, access to banking, online payments, etc. I'm conscious that also has an impact on the resources available to those businesses, human resources. If amongst the audience today we had policymakers, and we heard this morning about the competency-based curriculum in, I believe it was Kenya, what advice would we give policymakers in making sure that we have the workforce available to fill the vacancies that these businesses create? Is there a shortage of skills on the tech side, for example?
Well, it depends on economy to economy. I think so. We in the GCC part is heavily well able to bring in the best of the resources from around the world into the country. I think so. It's a very cosmopolitan and a global country UAE is today. whereby we can bring in and pluck and bring in the best of the resources at the best point of time. And then, we're well situated in close proximity to both Africa, to Central Asia, to subcontinent, So I think the access to these kind of technology and the newer way of getting things done is very much possible. So we're quite fortunate to be based out of a region like that way, where economies hinder globalization or migration through, tougher restrictions of not being able to move people around. I think those are areas where less and less tech companies would start to prefer to be placed out of, And I think as every country should start viewing this as an adaptation rather than, restricting people from coming inside, But it's a big challenge, How do you sustain local job giving versus migrant population coming inside? It's always been a very hot topic, but, let's say, we're lucky that we don't have that in our part.
I don't believe there's any dearth of good talent around there. I think the human mind is tremendously valuable, and I think, people have come up with, it's not that these things were invented outside, they were done by us, right, as human beings. And if you look at the next generation of people that are coming about, they're thinking so far into the future. I was at, a G20 summit the other day, and I was telling this to one of my panelists. I said, listening to Elon Musk, this guy is thinking about cars flying, cars underground. I mean, he's got this network of tunnels in Las Vegas. I mean, that's the kind of thing that you've got. I mean, there's amazing talent out there. And I think, we're just at the cusp of who knows what it's going to bring us in the future. So I'm absolutely bullish on this.
I think also one thing that you see also, especially in Africa, you're beginning to see a lot of hubs are being created, that startups are beginning to emerge in different cities across Africa. And that is actually propelling this revolution. You see a lot of young people, right from school, even right in the universities, you already have little businesses they are doing. They belong to one particular hub in one of their cities. And clubs are also being formed. Now, because it's quite easy for a lot of them to get into this because the tools right now are available. Unlike in those days when the internet is so slow, now most cities the internet is, even in Africa, it's working.
Absolutely.
And giving these youngsters, a lot of tools they can work with, and that is really very important. So there's really no dearth in terms of expertise. More are being created on a day-to-day basis, and we're going to see that continue to happen. Yes.
So our fintechs in the UK actually have a different challenge in that they do have a challenge when it comes to finding the right talent, recruiting and retaining that talent. It is one of the areas that they come to us the most about being their biggest challenge or what's keeping them up at night. And there is different areas that we're working to try to mitigate that challenge. I think there is one key aspect, which is the ecosystem here in the UK is incredibly diverse when we look at an international perspective. So in 2017, we surveyed the industry, and more than 46% of those employed in UK fintech came from outside of the UK or from a different nationality. So making sure that we have policies in place to access that great international talent is absolutely core. But we also have some work here to do in the UK around driving educational awareness on technology and on financial services more broadly. And this goes all the way to school-age children. So we have a FinTech for Schools program, which is about educating young people on not only financial services, but on technology, and also giving them an opportunity to look at FinTech as a potential career destination of choice as they get older.
Nice.
You mentioned internet and on the African continent, and I read a remarkable statistic recently from the World Economic Forum. Something like 30% of the population on the African continent currently have access to the internet, as opposed to 80 or 90% on the European continent. It strikes me that there's a remarkable opportunity for businesses like the ones that you're operating on the African continent. And the ability to deliver access to financial services to individuals who perhaps might not have had them previously. Do you think FinTech can erode some of those borders and inequalities that have existed?
you talk about inequality, right? You see, the fact is that before, I think sometimes also Africa most of these third world countries are also misread. A lot of people today, because of the mobile network operators in our countries, now they have actually deep penetrations. What that does is that it brings internet closer to the people than before. So a lot of people today have their mobile phones. With that, they can access the internet anywhere they are. And now today, your mobile phone also has become more like your own router. So they got their PC, and they can link it up, and they can do whatever they want to do with that. Now, one of the biggest challenges that today most of us face today in terms of the talent is that indeed, from the British, from the Americans, they're all picking up the youngsters locally in Nigeria, and basically they can do their job right from their homes. So there is still a lot to be done for the internet penetration, but I think at the moment, as we speak, and it's growing. In fact, nobody's pushing it, but it's growing. A lot more people are having access. So maybe they need to check that. That report again, I mean, from my own understanding, I see a lot more people, doing a lot more transactions, a lot more work on the internet, unlike before, maybe 5 years before. But now it's a lot better. Yeah.
I think the Internet of Things have really opened up the horizon for the FinTech community as such. Today we have a lot more webinars, we have a lot more close-minded groups that pass on information between their own peers, which really helps them to cross-pollinize ideas and bring out new products, and find out the pain points that exist between countries and, how it could be sorted out, So I think the Internet of Things have really given a larger landscape for people to really work upon. And I think that's really helpful because it really shrinkens the border scenario as such, where people need not to be physically present in that particular place to have these kind of discussions, So I think it's been a good element of things, but on a contrary, on the FinTech space and so on and so forth, on the initial startup, a lot more cyber crimes, fraud, and all those kind of things is definitely a huge challenge when it comes to the cost that needs to be put in by these kind of new setups and startups that has to come inside, So cyber threats and crimes are a serious challenge when it comes to these new set of FinTech innovative people that are coming up,
I think this leads us on quite nicely to my next question. Some of you participated, and speaking of webinars as well, some of you participated in last year's FinTech panel, which was delivered online. What would you say have been the challenges and also the opportunities that have arisen in the last 12 months since you participated in that panel?
I think the good thing is that, you kept the conversation afloat, and then the bad thing is that, we don't get the physical interaction, So, the networking vanished because of being on the online space. But of course, that physical interaction brings in much more effectiveness. But of course, the webinars really keeps the conversation flowing.
So I think you're specifically talking about FinTech changes, et cetera. I think a lot has happened in this space and continues to happen. I hate to come back to my old favorite hated subject called crypto and digital currencies, but we've all seen what's happened in the crypto market, right? At one point we thought it was amazing, then next week we thought it was horrible, then we thought it was amazing, then we haven't decided whether it's horrible or amazing right now. And that's been pretty bad, but I'm more bullish about a couple of other areas. I think digital currencies, specifically with a focus on central bank digital currencies. I think this is going to manage settlement times really well across geographies, and not at the retail level, but more at the business level. And we had stable coins, and some of them were not quite stable, and they went down. But I do believe that stable coins are going to manage the transition of central bank digital currencies from one currency to the other until we can come out with something firm. Again, I think all of these opportunities are tremendous. They've evolved quite a bit since we last spoke. I mean, I know there are many more central banks considering digital currencies. The US is now considering a digital dollar, which then calls into question, will we ever need a stable coin if you've got a digital dollar, right? I mean, it might wipe out that part of the industry altogether. So there's a lot happening. I mean, and I think more to come still in this space, which is going to be tremendously valuable for payments and businesses across the world.
I very much agree in terms of the digital currency and especially the opportunities around the wholesale side, absolutely. I think that's something we've seen and will continue to see. I also think over the last 12 months, we've found ourselves moving into a very significant cost of living crisis around the world. And that has also shown a spotlight on the role that technology can play at its best to increase inclusivity and to support both individuals and SMEs in terms of better managing their money, better understanding their money, helping to grow their money as well. So I think there's a new opportunity that sits in front of us about how can we all as an industry work together to make sure that the consumer is benefiting as well.
Yeah, the central bank digital currency is definitely the way forward with being a regulated aspect of things. It is really going to help out. And I think so with much of the central banks deciding to do it in two fronts, which is one is the corporate payments and one is on the retail payment side. I think so it's going to be very exciting times ahead once most of the economy starts launching it out.
So I think now we can turn to the more controversial, perhaps, part of our discussion, which is on the use of blockchain and distributed ledger technology. I think there's little doubt in everyone's mind as a result of the very public failure of FTX and the issues that has exposed on the vulnerabilities that the sector faces. We spoke a little bit before about whether more regulation was required or not. I'd like to have the panelists' view on that.
So I definitely am a big proponent of having more regulation in this space, right? I do believe it's the right thing. There's also this entire thing about anonymity, right? I mean, you think about it, if we truly have blockchain and DLT available, you should arguably know where every single cryptocurrency or digital currency has been at any point in time. Then why do we say millions got stolen from so-and-so exchange?
Exactly.
Right? I mean, someone's got a record of it. Right, and people don't want to, they don't want to come out with that, and because that money is exchanging hands somewhere. So, I do believe that regulation is required. Look at what happened with FTX. I mean, some young guys had a great, amazing villa in Bahamas, which they spent $40 million on, and they blew it all away. I mean, billions. People got wiped out, right? So, someone needs to, we need the headmaster cracking the stick out there every now and then for them.
I agree with him completely. I mean, regulation is important, and the issue of anonymity is clearly what pushes people away from all that, And if indeed, and when it comes to financial transactions, security is important, right? And knowing who you're dealing with is important. And when there is this anonymity, automatically creates, a negative effect on the people. And I think that's why regulation and how the various central banks regulate, bring the regulation that will help this is important. In most of the African countries, most of them are quite completely against today, the standard digital currency. They want to do their own digital currency. But the regulations are still not really out there to enable and make it comfortable people to actually get into this. And that's really one of the major problems. I think that's an area that the experts need with the regulators to come, to fall with a proper regulatory environment that will help both the users and also the producers. I think that's for me. So I completely agree with him.
For me, I mean, I completely agree with all the guys, So here, I think so in the case of FTX, you can't just generalize that across the entire, crypto world as such. Here it's a pure case of corporate governance and risk profiling going off out of the windows. So I think so, that could not be generalized across the sector as such. I think so the digital currency side or the crypto is definitely here to stay. Because it's been liked by the millennials, So the end user, there's a large amount of population who really likes using that particular way of transacting, and if they do and that's here to stay for a longer is what I strongly feel. But as we all said, we require a good amount of regulations to come inside, so we all can have a good night's sleep.
Yeah, and I would add, very similar viewpoints across the board. I would definitely echo this sentiment that one scenario, one bad actor, can't be a representation of an entire industry, of an entire sector. But at the same time, we need to have this regulation in place as well, and we need to make sure that it's moving in a timely manner and it keeps at pace with the new technology. The FCA here in the UK has done a strong job in terms of having a crypto sprint where they're trying to grapple with the new technologies, how can they most appropriately and effectively regulate it. But it is a challenge. And for example, when you look at crypto authorizations, we have been really heavily advocating for things to move much quicker than they have, because both for the protection of the consumer and for the enabling of the growth of these companies as well.
The positive side is that had it not been for the cryptos and the bitcoins and so on and so forth, a lot of regulators would have never looked into this area, and we would have never had a generation that would get adopted into the digital currency as such, or it would have happened, but it would have taken a longer time for it to happen out, So these were all enablers at a certain point of time, but I think so the regulations got missed out in between.
I think timely manner is a perfect way to describe it. I think part of the issue has been policymakers and lawmakers keeping up with the pace of the development of the technology and the industry and the innovation that follows from that. It strikes me that within the Commonwealth, we have smaller, in particular some of the overseas territories who perhaps are more nimble and can move to regulate faster perhaps than like Gibraltar. And sitting in Gibraltar, it strikes me where we have been regulating the sector for some time, it strikes me that other jurisdictions haven't moved to do that as well. I'm interested to hear the panel's thoughts on why that may be.
So, I'll give you the example of what I've seen in different geographies and where they've been a little more progressive. I think we look at a lot of the African countries and they've been very progressive about some of their regulation, right? A lot of them are starting to look at, as you mentioned, digital currencies earlier. But even if you think about mobile money, right? Today it's fascinating. We think of mobile money as something that's cool and nice to have. But a lot of people in Africa have had it for quite a long time. Today the largest number of mobile transactions are taking place in countries like Nigeria and Ghana, right? I remember stopping at a traffic light in Ghana and there was someone that was selling everything from a sofa down to a little bottle of water, and all of those were on mobile transactions, right? That's fascinating, I think, and so they've definitely taken a big leap on that front, so they're doing quite a lot of progressive work. Your thoughts? Yeah.
Definitely, I think, if we look at some of the changes that we've seen, at a point, nobody actually thought that the mobile revolution as we see it today was going to happen. Because, I'll give you a simple example. In 2003, you send an SMS, for example. It comes back to you the next day. So you can actually build a real-time electronic payment platform on such an epileptic network at that point in time. But the fact is that we know that it doesn't happen the same in the UK. So it just tells you that, well, this is just a challenge that needs to be, could also profile an opportunity. And that has happened today, that the revolution in mobile payment across Africa has been phenomenal. Kenya, M-Pesa is, almost everywhere you go, that's what you can use. In Ghana, the same thing, the mobile revolution. In DRC, almost every country, that revolution is on and continue to catch on, day to day. But when it comes to the area of digital currency, it's still a big challenge. People are still struggling to understand it. And you're not getting enough information from the regulators, and that's where some of the challenges are.
I think a lot of the on-ramping onto digital currencies is still challenging for the average person. How do you actually buy this stuff, and how do you use it? And then when one looks at the failures that have happened, a lot of the issues arise from centralized counterparties and their failures. So lack of good corporate governance, lack of security, lack of simple principles like segregation of client funds, right? Things that in the traditional financial services world are a given. Do we think we'll see more traditional financial institutions coming into the sector and perhaps imparting some of their knowledge or even providing the service, for example, of custody of digital assets?
Yeah, absolutely, yes. I think so. It's already happening out. So in most of the places where the regulations are not stronger, and central bank sends out a breeze of cautious down there, they always look for a traditional player to hold these assets, so that it's much more controlled in that aspect. As you are rightly asked, why are certain sectors not regulated as much as certain sectors are, and I think so the plain simple answer for me is that, a lot of people don't understand, after all, the regulators are also people like us who are trying to make wins on, how does this particular currency and how does the blockchain and how does this entire crypto field work and how can it be secure? And in the search for all these quests, they always like to get the traditional people more involved in the story so that they can have more control over the issuance of these kind of tokens and so on and so forth.
What I see also is the banks are very conservative and very risk averse. They still don't understand. Bankers are here, about this digital currency, and they still don't understand how it works. And that is one of the biggest problems we have. And if you look in some countries, like even in a country like Nigeria, the central bank has said to every bank, don't open an account for any crypto company, all right? So from that alone, they won't touch you. So there still need to be a lot more of information out there for the banks. I don't know of any bank that I know of in Africa that is actually working aggressively on crypto. I don't know of any. In fact, the moment you talk about it, they'll switch off. So that's really a challenge. So the central banks need to come out with, like I said before, we're just repeating ourselves again, proper regulations on how to do this.
Yeah, and I completely agree with that. I think, for any banks to do something in this space, they have to understand what they're doing, right? So when there's a lack of understanding, you're always suspicious, and you hear some big stories out there that say, geez, FTX went down, oh my God, I'm against crypto. I think what we are seeing now is a trend among financial institutions to spin off an independent group that actually focuses primarily on FinTech and that kind of thing. So if you think about Santander moved Pago Next, right, and they've got all of their payments products going through that. It's very different, right? It's a different mindset. You need to be accepting, you need to be open in your thinking, and you need to really start to look at progressive ways of doing things. So absolutely, I think it's going to happen.
You can kind of understand, I think I at least have sympathy for the banks in that respect. There are a very small handful of them that will deal with blockchain and crypto clients, and it has a lot of challenges. And I think correct, if you have a different view, please jump in, but I think the industry view is that until you have a harmonization of legislation, probably on a global scale, we won't start to see traditional financial providers actually coming in to service that industry because of the uncertainty that it creates for their own business models.
Yeah, but at the same time, I think it's important that all these banks recognize that this is a future opportunity, right? And so they don't want to lose out on that. And so oftentimes they're saying, okay, I'm going to look at this, but I don't want to openly say that I'm looking at this because, the regulators might jump all over me. So you've got a separate group that is actually following that aggressively. I mean, and occasionally a bank comes out and actually does it, and they make wonders in this space, I think.
Yeah, and I will build on that because within our membership base, we have almost all of the UK high street and investment banks and also many of the European. And it is actually markedly interesting, the different and the varying levels of approaches that these banks have towards crypto and towards digital currencies. And some are much, much further along in terms of their strategy, in terms of their engagement than others. And some of them are actively pursuing a strategy that will enable them to have competitive advantage when this moves forward. So I think it's a very different It's almost a unique proposition, but almost all of the banks we work with are very engaged on crypto and digital assets, and they're just looking at the next framework for that. Some of them are very actively asking for regulation, again, going back to our earlier point as well.
We've used sorry.
No, I think also, you know, in all this, there seems to be like a solo effort from the different banks and institutions, and that is not going to help this matter until, in my opinion, there is a global standard and an agreement, just like today you have with banks sending money from UK to America. You know, there is a standard agreement in terms of how it works. Until we have that in place when it comes to crypto, and it's still going to be a challenge to get this moving. And that's where I am on when it comes to crypto. There needs to be a global understanding among the players in terms of how this works. And that doesn't seem to exist now as it should when you compare it to the standard traditional forms of payment.
I mean, there's another interesting layer to this as well, because when we think about the future of financial services, ultimately, digital finance is the future of financial services. So there is also a competition happening from regulators around the world as well. So looking at who's moving faster, is it the US, is it the UK, is it Singapore, in terms of regulating these new digital currencies and digital finance more broadly, because ultimately that will then ensure that that region or that country is the global center for financial services more broadly. So I think that's another layer that's been very interesting.
I'll just like to add another layer on top of that, you know. So here is where, when we have this digital financing, digital identity is a very important aspect, you know, where we have multiple fields of engagement by the same consumer as different identities across, you know. How do you combine that into one single identity, and then how do you use it across the face, you know? So I think so it's just not about digital currencies coming aside, you know. So there is a lot of auxiliary thing that also needs to be falling in place before we can really see the use case coming out in a very proper manner.
So I think we have one action point from today's summit, which is to create a harmonized regime across the Commonwealth. We've used the word digital assets quite a lot in our conversation today, and it's the word asset in particular that I'd like to focus on for a moment. It's something that my father asks me on a regular basis. Do we think that digital assets today are a store of value?
Oh.
Repeat that again.
Do we think
it's a
that
digital asset of value?
I'm going to say yes, but
I don't.
I think so. I think it's value, yes.
I've never invested in one, so I don't know.
Well,
So I mean, I like that space, but unless it is not regulated, you know, I'm still not very confident, you know, on use of that space. But, you know, yeah, you know, I definitely see that, you know, it is going to happen at some point of time. I closely watch it. I closely follow it. I closely try to learn it. But I still don't feel, you know, when you say Bitcoin is worth what today, 17,000, 18,000, you know, how is it worth? You know, it's not pegged against something, you know, it's not the gold, you know, but it's a traditional mindset. But, you know, I think so, you know, unless it is not backed by something or stamped by an individual or an authority or a country, how do you create a value for a trading commodity, you know?
So if you don't mind, I'm going to pick on you for a moment. I understand you're the MD of 2014 Holdings,
Yes.
right, and owning a number of iconic hotels. Do you think in the new, so part of the issue with, and my question before as to whether digital asset was value, was interlinked to the volatility of it.
Absolutely.
And the volatility is partly linked to the lack of adoption. Do you think that in the near future, it's likely that, for example, I'll be able to pay for my stay at the Waldorf Astoria in Edinburgh using Bitcoin?
Sure. I strongly believe that that's going to happen, you know, sooner than later for me. You know, I'm sure that, you know, there would be a time when you do it. That's one side of the thing. And then you have things like NFTs and so on and so forth, you know, where you have physical assets being converted into digital assets, you know. I'm still fascinated by that, you know, where art and art forms are getting converted into so things, and then the trading is happening, you know. So how does that create a value out, you know? So, you know, I think it's a vast field. Should see how it is fastly evolving.
Janina?
Yeah, absolutely. I think digital assets are the future of financial services, digital finance more broadly. And even if you look over the past few years, I mean, it varies on a region and a country-by-country basis. But a couple of years ago, I know EY paid all their staff in Switzerland in Bitcoin. And so there are various guises of that. But I definitely think going forward, we'll see that payment. Yeah.
And then one of the other issues that we haven't spoken about on volatility is market manipulation, right? Something which in the traditional financial services world is clearly illegal. Mm-hmm. In the crypto blockchain world, not so illegal. Why do you think that, it seems to me that would have been a relatively easy fix to create that volatility and protect consumers, but yet there doesn't seem to have been intervention at any level. Do you think that that's going to follow soon, or is it something that regulators are still grappling with? Possibly more of a question.
I think it's going to be difficult to do it on the Bitcoin side because, it is a highly speculative instrument, right? And nobody's really buying Bitcoin because they want to pay someone a fixed amount. They're buying Bitcoin because they're hoping to make money out of it, right? It's a speculative instrument. And now the SEC has come out and said, should they regulate that? Because they honestly believe that people are investing there only because they want to make money in the long run.
I think it lost its primary objective when it started out. I think Bitcoin was used for a legal payment of payments and so on and so forth, and suddenly it moved out to become an instrument of cash generation. Profit generation out. I think so. Somewhere they lost the story in between, is what I feel.
Yeah, there's some of those like Ethereum. I think is more adaptable to payments. But Ripple, I think at one point Ripple had said they were going to conquer the entire, remittance world globally because they were going to allow people to send Ripple to Ripple. But, mom sitting back in some tiny village somewhere is not going to want a Ripple, right? She's going to want real money to make a payment. And so
Absolutely.
It didn't quite work out the way they
Also, I think really important that we segment out different types of digital currencies, right? So we talk about stablecoin, we talk about different types of engagements, and even things like central bank digital currency have a huge opportunity going forward as well. So there's different risks, there's different opportunities across all those pieces too.
Do we think that we'll see crypto and blockchain and DLT intertwining more with payments, as mentioned?
Yeah, absolutely.
It's already
100%.
It's already there.
I think it's already there, but I think also we'll see much more utilization. And, it's important to separate Bitcoin and blockchain, right?
Exactly.
Blockchain is an enabling technology. I think we'll see a lot more, use of DLT, blockchain. Maybe blockchain is tainted because everyone thinks Bitcoin and blockchain are the same. So we'll call it DLT, but I think you'll see a lot more DLT being used specifically in financial services as we move forward. And definitely blockchain also, the different versions.
Yeah.
Thank you. Well, all that's left is to thank our wonderful panelists. Thank you very much.
Thank you.
Thank you very much.
Thank you.
And thank you, Jay. That was insightful. The main takeaway is stay away from crypto. Good news, it's lunchtime. So get out there, have some food, stock up, continue the conversation, and we'll see you back here in an hour.